Welcome back, traders, to Talking Trading. I'm Nathan Bray. I'll be your host. Today we're going to really zoom in and have a look at some of the key levels that have been broadcast out on the new ACY Telegram channel. That is the interactive trading feed. Now, joining me in the studio today is one of the co-founders of this interactive trading feed on Telegram and our world... Are you the world team leader?
Global desk team leader.
The global desk team leader himself, Lenny Volpicella. How you doing, Lenny?
I'm very good. How are you, Nathan?
Fantastic.
That's excellent.
Have we seen some crazy volatile markets over the last few weeks?
We definitely are. We definitely are.
Now, I know there are geopolitical things going on in the world, but we want to keep this pretty technical for traders, and that's really what the live interactive trading feed is all about. So tell us, Lenny, is there a particular key level in a particular instrument that you've been liking the look of that got sent out on the Telegram channel?
Well, there's definitely been a few. The main one that springs to mind is the euro dollar.
Beautiful.
And euro dollar 111.21 was an area which we highlighted on a daily chart. So initially,
one of my favourite levels over the last few weeks.
So yeah, the euro initially traded down to 111.21, acting as previous support. That support was then broken. We had a shift lower down into the 108 region.
Absolutely, yeah.
From there, we had a push back up to 111.21, and we saw a failure in that zone. And yesterday could potentially be the low of the week, in which we saw in the mid-range of 109. Now, the issue is the euro came down into a monthly support region, right? We shifted back up into that
like
number we mentioned.
A longer term right? Support, regardless of what's going on,
exactly.
I guess, fundamentally or even geopolitically.
Exactly. Now, the reason why I say that is we ended up trading down to that mid-range of 109 yesterday. And the fear is that we're potentially putting in a higher bottom on the daily. Although at the time of that, that level being posted on the Telegram at 111.21, it was a perfect opportunity where it was, a couple hundred pip trade, depending where you'd put your take profit. And it ended up trading down from those levels. So if you're an intraday trader or you're a position trader who likes to hold trades over a series of days, then that trade would have worked out beautifully, and there would have been plenty of opportunities to get risk out. And if anything, you'd still be sitting in that trade now if you do have the belief that we're going to retest that monthly support down at that lower end of 108.
For sure. I think one of the things I liked about it was when it did break that particular level, it came back up, failed. So you had a 300 pip move down, followed by a move back up. It fails again, even though it's putting in a high bottom technically. Then it's a 200 pip move down, and then most recently over the last few days we've had 100 to 150 pip move down as well. So for traders, I really like these particular levels, because if you get a trade set up based on your trading strategy, then it can be fruitful, even if overall you end up being wrong, right?
Yeah, exactly right. I mean, the key levels are there for the traders to make a decision.
Yep.
Right? And not everyone has the luxury to be able to sit there and watch and analyze the markets all day. So by receiving an alert that the market is at a particular level, and the trader then has the flexibility to make a decision whether they want to go long or short, the analysis is there for them, So it's really up to them what they decide to do with that key level. We're just here to highlight them throughout the trading day.
Brilliant. And I guess the other thing I want to talk about is gold. Obviously, we've had a big move up in gold, and one of the key levels that was broadcast out over the last week or so on gold against the US dollar particularly was looking at the fact that, yes, we've had a big move up where gold has broken through to new highs. I believe it went up about as high as, $2,070. So it even broke through that 2,000 level. So then the question is, do you just suddenly start buying in, thinking that this trend is going to continue, especially when you've got it being pushed higher by geopolitical events perhaps that you don't really fully understand yet? And in fact, no one fully understands what the outcome's going to be. So then looking at a key level where price pulls back. So if you want to move in line with this trend, we've got to wait for price, I guess, to pull back and show us that support is forming. So we did get a massive pullback on gold, didn't we, from 2070 back to this level which was broadcast out at the 1916 level. So that 1,916, that was like the previous monthly high back years and years and years ago. And now we've had a breakthrough of that price level. So we're waiting to see price come back and show some support. So there, when we looked at that as a weekly resistance level, which coincided with the former high from years and years ago, and from the 2070 high, it was also a 62% retracement region as well. So those types of things, when they're all combining, I think that has been a key level. And to this day, it's still holding there. However, if we get more weakness perhaps in this gold as a result of US dollar strength on the other side, the next level down that we were broadcasting out is this 1877, which is like your previous weekly resistance level and down around that 62% Fibonacci retracement level. So these are the two regions. At the moment, the 1916 is holding, but if we do get some more volatility, or perhaps even if the war gets, peace talks start or something geopolitical is happening in the Ukraine, that 1877 resistance level is also a key level. What do you see moving forward here? Is there anything else with gold that you're keeping an eye on?
No, they're just the key levels for now. We have to keep in mind that for a while there, gold was trading lower and stuck in a particular range for the past year or so. And this recent breakout, like you said, if old resistance can now become support and we hold, then are we going to see potentially that 2075 all-time high be tested again?
Very true.
Yet the question remains, the Fed is the biggest factor in the market around the US dollar at the moment. So depending on their actions, that's going to have a major impact on gold pricing in the future. So
it's not like inflation's going to disappear even if the war ends, right? So we've got that as a fundamental changer, I guess, as a game changer even for the trend of gold breaking out of that consolidation period now into a definite trend. Now, Lenny, actually, I was going to ask you, because it's been a very volatile week, what the hell is going on with this Japanese yen? But what we're going to do is ask that question to our own market strategist and the host of our webinar series, Duncan Cooper. Now joining us via video link in the studio here at ACY is our senior market strategist and all-around good guy, and might I add, the third founder of the Telegram ACY live interactive trading feed channel. All the way from Queensland, we've got Duncan Cooper. Hello, Duncan. How are you doing?
Good day, gentlemen. How are we doing?
Not too bad. How are you doing, Lenny?
I'm doing very good on this fine morning.
Duncan, I know you've been up there fighting COVID. I know you've had COVID. I know you've got floods in the streets up there in Queensland. But is anything more doubting or more bearish at the moment than this Japanese yen? Tell us, Duncan, what's going on with this yen and what sort of plan of attack have you got for trading the bearish nature of this yen moving forward?
Obviously, the yen's been getting weaker, and we've had, if we take a look at the euro yen, for example, 12 or 13 days ago, we were in a bear market, and I'm sure traders were thinking, okay, looking for a rally of 1 or 2 days to get set to, sell and position themselves for further move down. And now we just had a relentless move up of 12 or 13 days. So, once we're moved up 12 or 13 days, it's very difficult to be a buyer.
Absolutely.
Basically shifting your mindset from being a seller, and then the market's moved into a very strong uptrend, and we're 13 days up. So I think from the perspective of being a trader, you probably need to wait for a couple of days of a pullback and the market's settling back to some kind of normality, so that we've seen price action in much more of in its normal price action form before looking to assess where do we go from here.
Absolutely. So now that I guess a question that Lenny brought up with me earlier, Lenny, you were saying, is this just a parabolic move up, or you were suggesting perhaps, are we in a change of trend? What do you make of this current weakness in this Japanese yen?
The main pair that I've been following is the Aussie yen, and as well as the Kiwi yen. And out of all the yen pairs, the Aussie and the Kiwi have been the strongest in terms of their rally so far. And for a while there, the monthly chart was showing that the Aussie yen was in a downtrend. And recently we've taken out all the higher tops. We were actually last night pushed above 90, and we ended up hitting a high that we haven't seen since 2015.
That's right.
Look, I mean, it would have you a little bit nervous in terms of wanting to buy in up here or thinking how far is this rally going to stretch. But has the sentiment changed? Are we now going to be looking to buy the pullbacks, or this parabolic move that we have seen, are we going to see it come crashing down at some stage? I'd love to hear Duncan's opinion on that one.
Well, obviously we've been having a parabolic move, and I guess we all have to assume that it's a parabolic move has to have something to do with the Russia-Ukraine war, and obviously we don't know when that's going to end. So we've had a parabolic move. All parabolic moves tend to come to an end. The question at the moment is, are we just going to have an end, a short-term 1 or 2 week pullback, and then we've got a longer-term change in trend, for the rest of the year? So have we seen a complete change in the trend now to the yen crosses? Because obviously the euro yen, for example, was in a significant downtrend. Aussie yen was maybe in a downtrend to a rather range bound, and the New Zealand yen was in a downtrend, and now it's clearly in an uptrend. So we may have had a longer term shift in trend on the yen pairs. Obviously with a parabolic move, usually when you get a parabolic move that ends and then we get a very sharp move back the other way. I think, at the moment, as I was just saying before, it's great when price is doing its normal thing. You have your structure and your framework that you're trading around. When it becomes a parabolic move, if you're already in the move, that's great. Then you're just assessing where you're going to get out. And with a very parabolic move that we're having at the moment on the yen crosses, is just having to stop underneath the low of the day before would be a good way to exit for profit, because at the moment none of the yen pairs are having a day down. So they're just having continual days up. So if we're just having continual days up and you're in a position to the long side, obviously you're still making profit. But for the long term, I think we'd have to look at the next 4 to 5 weeks, a good month worth of trading, and just see what price does. Does it start to settle down a little bit? Do we have 1 or 2 weeks pullback? Does the market then start to consolidate a bit and form a base of support for another move up? So it'd be great to have my dogs barking in the background.
Checking dog.
I think the yen is upsetting him.
Yeah, so it's the postman. He's just coming past my house. But I think 2 or 3 weeks of the market settling down a bit, we'll probably see a base of support form somewhere. And then from that base of support, we can assess, is a longer term trend going to move up from that level? Or do we just see an end of a complete parabolic move and we end up moving back down to where we came from? And that's always an obvious result that can happen from a parabolic move.
So what would you look for in terms of confirmation to trade a pair like the Aussie yen at the moment? Would you be looking for price structure to change on, let's say, a 4-hourly chart where we start to put in lower tops and bottoms and potentially ride the wave back down to where the rally started? Or would you be looking to sit back, wait to see if we can find support at previous tops and then become a buyer in this market? What's your sort of game plan in regards to these yen pairs, in particular the Aussie yen?
Especially when it's a parabolic move that's changed the longer term trend, isn't it? Is that going to hold?
Right. I mean,
so what
I'm
are you
just looking at the yen pair now on my own screen, and like you were saying before, Lenny, we challenged the 90.29 monthly high back in, just getting the date here, back in 2017. 2 or 3 weeks ago, we would never have thought we were getting to that high level. So the market today is just challenging that level, and we're seeing as to whether we're going to move through. But over the course of the last week, we've moved through, I'm just counting them now, 1, 2, 3, we've moved through 4 monthly resistance highs without a day down. So what I'd be looking for at the moment is some form of a pullback to a monthly high, broken through. can we form on the daily chart a higher bottom? I know you were talking about the 4-hour chart, but I think the market's just too volatile at the moment. I'd like to see some kind of support form on a pullback on the daily chart, ideally at a key level of what would be now monthly support, one of the highs that have been broken. Ideally, if I was wanting to get something that was, perfectly ideal, we've broken through the 86.24 monthly top, and we're a long way away from that at the moment. But that has been a key area of resistance for a long time. If we pull back to that level over the next 2 or 3 weeks and started to hold, and then we got a higher top, higher bottom formation on the day chart, then that would give me some confirmation and confidence that the market is still holding to an uptrend. I want to put in a base of support for a further leg up. So the question obviously is at the moment is, when does this first massive leg finish? What kind of pullback do we have? And then do we find a base of support for another leg up potentially? That's what we're right.
Well, thank you once again, Duncan. We look forward to your webinar series, and you've got your new advanced webinar series just being launched at the moment, and we look forward to working with you in the ACY Telegram channel. So I think the takeaways from there, Lenny, is we need to really be patient, and we need to sit and wait for what Duncan is saying, waiting for confirmation, looking at the longer term daily trend perhaps.
Definitely so. And any final words for traders in these volatile markets in regards to position sizing, stop losses, take profits, and their overall risk management?
I think when the market's not doing what it's normally doing, there's always an added risk. So you have to look at the market's there 365 days of the year. So whilst we're experiencing extreme volatility at the moment in the month of March, as we get into April and May, I'm sure things will calm down a little bit. So you don't have to look at, I have to participate every day. I'm happy to participate when the market's in its normal form, less volatile. At the moment, if you're going to participate, you really have to look at reducing your position sizing, having larger stops, and ask yourself the question: if it's just too volatile, just step aside for a moment, because the market is there for 365 days of the year. You're in it for the long haul. You don't want to be taking unnecessary losses when you don't need to, if the market violently swings from one trend to another. So just be patient. Once the market's not its normal framework, as I was saying, because I have a framework that I trade around. Once my framework's not really working, I just have to sit on the sidelines and say, okay, I'm just going to sit back, let the market settle so that my framework can start to work again, and then I can trade around it. So if you are prepared to trade in this market, I think you have to lessen your position size, larger stops obviously, and be prepared to act very quickly in managing your positions.
All right, brilliant. Thanks heaps, Duncan. Thanks for joining us. Our senior market strategist, Duncan Cooper, and another episode done here at Talking Trading.